How's it going, everybody? Danny Naz, Papa Wall Street here with another weekday workshop. Today, we're going to be talking about two recent trades. The first one we're going to go over is MU. The second one we're going to go over is Tesla. Now, both MU and Tesla are open, meaning I think barring any major catastrophe tomorrow morning on CPI, I think we're just about getting started in these moves. And we'll take a look at what that looks like on these charts. What I'll go over is my thesis for the trade, what I used to execute the trade, and how I'm managing the trade as we are moving along in the market. So, uh, not much else to say. So, I guess let's just dive right into the chart. So, the first one we're taking a look at is MU, ticker MU. This is Micron Technology. They are in the semiconductor space. And if we could just take a quick peek at SMH. SMH is the Vanex Semiconductor ETF. And you'll notice on June 24th, we had a breakout. We moved right to the 6854 Fibonacci extension. That is a long-term extension dating all the way back. You know, it might even make sense to go to the weekly, dating all the way back to 2014 into, let me see where this actually started. Yeah, this one dating back all the way to the low in 2008. This is the housing crisis low. Very important, right? Look at the 1618 rejection here, pullback, backtest, bounce. Look at the 3618 here, rejection, pullback, bounce, rejection, pullback, bounce. And now we're at the 684. When over the three, over the 4236, you do have a, I'm sorry, over the 3618, you have the 4236. And then over the 4236, you have the 6854. So look at the undercut and then ripping, absolutely ripping. Okay. Why is this important? Why am I talking about SMH? Well, because MU is in SMH and MU has not participated until recently in this big move. In fact, it pulled back while NVIDIA and AMD were running. And I love these laggard trades. Now, I wouldn't just take the laggard trade just for the, for the heck of trading a laggard trade. No, you want to have some structure set up. And so what we're going to talk about is the structure that I saw setting up that made me confident that this is a trade that I want to be involved with. Okay. So let me grab my tool and let's dive into this chart and talk a little bit about now that I've set the stage a bit. Okay, so first things first, where I got involved, really where I started to pay attention was right over here. But I don't want to get ahead of ourselves. I just want to kind of set the stage here. So the first thing I'm looking at, I see, a gap up, boom. So we kind of think, all right, this is probably wave three activity. And when we see the gap up, right, this gets me interested here, this little gap down. And now I'm starting to look left. Okay, what's going on here? Where am I in this trade? So the first thing I see, obviously, I see the recent swing high. I see the recent swing low. Can I glean any information here? Absolutely. The first thing I do is I look for my first higher low right there. And I look for my next higher high right there. So here's your low, your higher low, your high, your higher high. So now I've got some information that I could work with. And so the first thing that I do is I draw not from the very bottom, but from the first low to the next low, I draw a channel. So that's from this low to this low. That's the start of my channel. And then I bring my channel up to the recent high. And that gives me what I like to call the 1-2 channel, right? And this is your 1-2 channel. And then your 1-2 channel has a center line. Okay. So now that we've set the stage, what are we looking for? So when we want to confirm Elliott wave, wave three activity, there's two things we look for. The first thing is a gap up. We see the gap up right here. The second thing is a break of the 1-2 channel. We see the same gap up and the break of the 1-2 channel. Beautiful. Now, it doesn't always happen this way. It doesn't always happen. Sometimes you get the break of the 1-2 channel and then you get a gap up, right? Sometimes that happens. In this case, it gave us the gap up on the break of the 1-2 channel. So to me, this signals wave three activity. Now, what does that even mean? Well, it means generally that wave three is going to be your longest wave in the 5-wave move up. And in Elliott wave, you have a 1, a 2, a 3, a 4, and a 5, right? And so we can clearly see 1, 2, 3. And obviously what follows 3 is 4. And generally what wave 4 looks like, it's either a pullback contained in parallel lines, or like what we're going to see on Tesla when I review that in just a few moments, a wedge or a triangle of some sort. In MU's case, it was a pullback in parallel lines. And so let's just take a step back again. So here's your 1-2 channel. Here's your break of the 1-2 channel. What do we see after the break of the 1-2 channel? A back test on the top of the channel, a bounce. A back test on the top of the channel, a bounce. Where did these bounces happen? Very close to the trailing 21 EMA. So had you missed the move on the break here, had you missed the gap up here, you could have bought into the 21 EMA pullback here, right? And then, maybe you missed the 21 EMA pullback. Well, you could have seen an ascending triangle right there. Well, look, there's another opportunity to get in. Obviously, I wasn't in at the